Hello, this is Dr. Alex Stewart, and this is a pre-listing pricing plan for your home at 830 Hagler Drive in Neptune Beach, Florida. Your agent, Caroline Knight, hired me to do an independent review of this property and to help us figure out what is the right price or what is the market price for this property. And so this report is meant to help you to see what the local market is doing and how we can derive a actual price for this home at the end. And before we go too far, it's important for me to introduce myself so you know who I am and why I'm even talking to you right now. But I was a financial analyst for a couple of Fortune 500 companies. When I started my career, I shifted over and had a long tenure as a mortgage banker, helping nearly 1,000 families here in Northeast Florida. And in that process, I worked hand in hand with appraisers to understand how they value homes, what are the rules, how does it work, all of those things. And I've taken that, my analytical background, and then I've earned my doctorate from the University of Florida and created a company called the Market Distillery. And it is an independent research company designed to help realtors and their clients make informed decisions around their real estate transactions. And so I don't have any skin in the game as to what price you pick for this home. My goal is just to give you a reasonable, thought out, logical, supported recommendation based on what we see. And we're going to do this sort of top down. We're going to summarize the details of your property. And then we're going to start with Jacksonville, go into Neptune Beach, look at specific comps, and then end up at a recommended pricing plan. So first and foremost, let's look at the details of your home. These were pictures taken from the last time it was listed when you bought it in 2019 for $1.1 million, which was $193 a square foot. It is in Neptune Beach, which is a desirable area for sure. I live in Atlantic Beach, by the way, so I know this area very well. Square footage is 5,700, so it is significantly larger than a lot of homes in the area. And that comes as a double-edged sword. It is unique in a way that people can't often find a home this big in this part of town, but that also means it's really challenging to have a lot of data to help us to justify this price. And one thing that you'll find in real estate is that the larger the home, the harder it is to actually sort of get value for all of your square footage. What I mean by that is you can't take a 3,000 square foot home that sold at, say, $400 a foot and simply multiply that by 5,700 and say, okay, now my house should be worth that. You see a drop off in how much of the square footage you can really sort of squeeze the value from. And so just keep that in mind as we're walking through this. Now, on the other hand, it has a private backyard, a large lot. It's got a pool. It's a really cool compound house that has the in-law suite. And that can be really desirable based on people wanting at-home offices, art studios, separate living quarters for multi-generational housing, all of that stuff. And it was remodeled in 2018. Now, I have rated this a Q3 and a C3. This is how appraisers rate properties. They have buckets from 1 to 6, 1 being the best, 6 being the worst. And they say, where does it fall within? And they have these really formal definitions of these ratings. Because I think a lot of sellers can say, well, you know, we painted the house and we put new light fixtures up, or, you know, maybe we put new flooring in. You know, whatever it is, it can be very difficult to actually say that moved your house from one bucket to the next. And when you read this, the quality, it is something that is, higher quality build from individual or readily available designer plans. You know, we know that this house is pretty custom. It's crazy to look at what it was before it got renovated. And the challenge is obviously a house like this doesn't exist elsewhere. It is well finished on the higher end. We can see that from the pictures. But at the same time, it's not this sort of one of one on the coast like you're used to seeing in Ponte Vedra as you drive along that, right? On the condition side, it is something that was renovated recently, but has been lived in since then. So you got about 5 years of living in it that has happened. So from what Caroline tells me, it's just got normal wear and tear, nothing that is major depreciation or major deferred maintenance that we'd have to worry about. And so that comes in at a C3. So I'll be rating the other houses exactly like that, but that's a good way for you to really understand, am I doing things to a property that would change it into a totally another category, or is it just sort of nice to have? Hopefully it helps it sell faster, kind of a thing. Now, the general market in Northeast Florida has changed over the last years, right? You bought this house. The market obviously went crazy. You got a whole lot of value through that. Since then, rates have gone up and the market's gone pretty sideways in Jacksonville. We have more houses on the market now than we have had in a long time. And that's sort of us getting back to a normal amount of houses, especially given the amount of people that are here. But it is still, it's like going to the gym for the first time after a long time. The market's kind of sore. It feels weird. A lot of people are concerned, especially on the buyer side, as to whether now's the right time to buy or not. And so that's just creating some hesitation. I would note that at this price point, you can expect a larger share of cash buyers to be in the mix. And that's a good thing, because if a cash buyer comes along, you might end up with a better deal than if someone who is going to finance this would, based on some appraisal challenges that we'll talk about in a little bit later on. Demand-wise, we're still selling about 2,000 houses a month in Jacksonville, which is great, but it is taking longer to get those sold. So there are some shifting things happening in this market. When we look, I can't predict interest rates. Nobody can. I can't predict the stock market, but I can give you a good idea of what the sort of general pattern of the real estate market's going to be, because it is very seasonal. We have a summer peak season and we have a winter slow season, and then some in-betweens. And that's a very normal pattern for our local markets. And the blue line is 20 years of history that we've averaged out to be able to see about what listings do. And so we typically have more houses on the market in the middle of the year, and then people take their houses off the market towards the end of the year, and then we slowly build back up in the spring. This year, though, we saw more houses on the market faster than we normally do. Now, it's leveled out since then, but this is, again, it's creating price pressure on sellers because there's a lot of options for buyers when they're looking for homes. On the pending sales side, this is our most live view of demand for real estate in Jacksonville. You can see that the year starts off slow, typically with some of the lower sales figures happening, and then it ramps up. And so the peak season is March through June. And then the market really starts to decline after that towards the end of the year as buyers make moves when people are out of school. Buyers make moves when the weather's nice, when they have more daylight to see homes after work and all of those things. And then during the holidays, it gets pretty slow. So when you decide to list this house will really determine the approach you take with the pricing. And here is the median sales price. Normally we see prices rise pretty good going into the summer in the peak, and then they fall in the fall, and then new construction closes out at the very end of the year, which gives us a little bit of a bump. But this year, we've pretty much gone sideways. And this is just showing us that we can't push prices as much as we have been able to in the previous years. And we should factor that in when making our pricing decision. And then lastly, when it comes to setting the price, getting it right up front matters a whole lot more than working your way to the right price after you list the home. And so let me explain this chart. The green bars right here are showing you we had 615 homes in September of 2025 sell in the first 30 days. And they got an average of 97% of what they listed the home for. So they didn't have to reduce price very much. They priced it appropriately up front. A little bit of negotiation during the process ended up at 97% of what the seller listed at. And on average, they gave a seller concession of $8,000. Okay, so if you couldn't sell it in the first 30 days, it dropped down to 94%. You know, if you go to the third month, 91, the fourth month, 89. And so you can see, if you don't get the price right up front, you end up dropping your price over time. And I've watched a lot of sellers mess it up. They test the market high and they end up having to go to an even lower number than they would have if they'd have just started out at the right price. Because if your home sits on the market for too long, people start to go, well, what's wrong with it? Or they start to get a little more aggressive on the deals they try to throw your way. and you don't get much action otherwise. Sometimes you can list it above the market and people don't even go look at it, right? So that's why we place a lot of emphasis on getting the price right up front. And if we zoom in and look at Neptune Beach, you can see that the same sort of thing is happening in Neptune Beach. We have an increase in the number of average listings on the market, so more competition, more homes for sale in the area. And sales have increased, but they have definitely not increased to the same degree. This is good because we do like more activity, and sometimes it takes more listings to be able to have more sales because people can only buy what's for sale. But in this case, the gap is widening, which tells us we got to be really dialed in on our pricing because, again, there's a lot of options. And the beaches have held value well. Just in Neptune Beach, you can see that there was some significant price gains. We know that happened when rates dropped and everything went crazy. Since then, prices have been going up a little bit at a time, but that's better than Jacksonville as a whole, which has pretty much been going sideways. And when we look at the negotiation dynamics between buyers and sellers, we see that currently the average is 97% of list that what sellers are getting when they sell. So it shows that there's probably stronger demand in Neptune Beach than in a lot of the other markets in Jacksonville. And this is because it's a unique market, right? These are not cookie cutter homes and big subdivisions that, are plentiful and anybody can buy. These are in a lot of cases properties that don't come on the market too often. So that's a great thing for you being able to realize more value when you come to sell this house. The timeline to sell, though, has been ticking up. So it wasn't as bad last year, but we're about 2 months on market. So our goal would be to get an offer before that. But that tells you, sort of expectation wise, if you sell before 2 months, if you were to put it on today, that'd be a really good deal. If you sold after that, then we didn't get the price right. So this will be something that we'll revisit when you do go to list the home. But it is something that is helpful for you to see to manage expectations. And so let's dive into some specific homes. I've looked along the beaches, Atlantic down to Jacksonville, for similar properties. And an appraiser would always tell you do not go east or west, especially at the beach, because obviously you go closer to the coast, prices go up pretty significantly. You go away from the coast, prices can go down pretty significantly. Although in this case, you start to run into the intercoastal and then prices go back up again. So we want to go north to south on this property. And the first thing you'll notice is that Atlantic Beach houses have a much bigger premium on them than Neptune or Jacksonville Beach houses. And so we take the Atlantic Beach listings with a grain of salt, but I wanted to put myself in a frame of reference of if I was a buyer looking for, say, a 5,000 square foot house, I probably would be considering anything along the coast. Maybe I don't want to go down to Ponte Vedra because it's a totally different thing, but we all know that Jax Beach, Neptune Beach, and Atlantic Beach are sort of like, if I can find something in those three beaches, I'd probably be happy. So that's why I included them. Now, I've highlighted a few of these listings because we're going to look at those in more depth. I think those are the most relevant. But if you notice, I did not limit the square footage on this. The biggest house on here is just under 5,000 square foot. And so the most common size is around 3,000 feet. And this, again, tells you when an appraiser goes to pull sales to figure out how to value your home, they're not going to be able to give you full value for the 5,700 square feet because you don't have any comps that would be able to be direct comparisons. And the banks don't let them make really large adjustments because they're going to say that house is too dissimilar if you're having to make that big of an adjustment on it. So I think you're going to be capped on what that high end is unless, the cash buyer that loves the property that's willing to pay a premium comes along. And then the question just becomes, is it really worth holding out for that? Or do we want to try to market it and potentially you get a multiple number of buyers that come in because it's at a good price? But as we look at this, we're going to look at these three houses. And the other thing you can see is this price per square foot ranges a lot. We'll talk about that more in a minute. So here is the property that is under contract. And what that means is that we've got a buyer, but it's not necessarily pending. So there's some, that maybe they got to do an appraisal. Maybe there's a few contingencies they got to clear. So we don't know the final sales price, but if it was at its list price, it would be $613 a foot. And that's really, really good for your house because that is a high number. and this is in Neptune Beach. It's very near your house. We have a pool. We have an updated home, similar quality and condition ratings. I think this was remodeled more recently. Is one thing that you got to take into consideration here is that might be a newer remodel, so it may feel newer when you go into that house, and it's a little bit more of a traditional look from the standpoint of it's a 2-story sort of single family house rather than kind of a compound feel. It doesn't have as much to upkeep or maintain, and depending on what people want, they may care about that. But that is one comp that we want to make sure we factor in. Next is a house that, to me, reminds me a whole lot of what you got going on. It's in Jax Beach, so there's a bit of a discount maybe for that. $323 a foot. But this actually sold, and that's important because it means it's concrete, right? We know exactly what the deal is. And this has a similar look to your house, right? It's not necessarily just that single family home. It's a little bit more of something where maybe there were some additions done. Maybe it was a little bit pieced together, but it's remodeled, it's updated, matches today's standards. It's got a really nice big backyard that's fenced in with a pool, and it has a pool house that is 152 square feet. So it has that sort of aspect of, I think this would be a legitimate comparable of a buyer going, do I want to live in Jax Beach in this house, or do I want to live in Neptune Beach in this house? And how much more am I paying for that, right? That's the big key. And then finally, here's a house not far, again, back in Neptune Beach, brand new construction. So that's the caveat. Doesn't have a pool, doesn't have a pool house or an additional dwelling unit, but it is brand new. And this came in at $482 a foot, 3,500 square feet, 5'4". It does have a wooded lot across the street. This is right off San Pablo. And so, we look at this and we go, okay. And so if we were to basically visualize the price per foot on all those comparable homes, I've got these color coded. Green is active listings. Yellow is under contract. Orange is pending, meaning it's just about to close. They've done everything they need to do. And then blue is actually closed. You can see it ranges, right? 300 to 800. And like I said, it's not reasonable to take a 3,000 square foot house that sold at 800 or 700, 600, and then just multiply that by 5,700. We cannot do that because the value just does not transfer that way. So we got to look at this and figure out, where do we stand? And so based on all of this, here is my recommended pricing plan. I start off by looking at the advantages of the home. It's a high-end home, right? In a desirable beach neighborhood. It's got a pool, which is a must at this kind of a price point, and it's got a guest house. Those are unique things. Those are things that could be very desirable to people, but they also are double-edged swords because it could limit significantly the number of people that want to buy this house, because they may go, that's way too big. I don't want that. I want to buy something that's more like 3,000 foot, like we've seen the other houses. So the challenge is, again, it being unique means it's hard to compare it to others. You might have a structure going on where this is a little bit of a Frankenstein house based on what the renovations were. They've done additions, they've modified the house. It may not have the same flow to it that the brand new house would, or that a house that wasn't kind of pieced together and remodeled would be. It's so much bigger than the other houses. The question is would they pay a premium to live closer to the ocean or in Atlantic Beach or something like that? Or would they want to get a house here? The good news is you should have better insurance on this than something closer to the ocean. And you do have appraisal challenges if somebody were to try to finance this purchase. So I want to give you a heads up on that. The comps put it out around $495. We know that we can't necessarily just multiply that by 5,700, as I've said, though. So we gotta factor that in. And then seasonally, when you list matters a whole lot. So like I said, we want to revisit this conversation right before you're ready to go on market. And I've come up with 3 different sort of options for pricing based on your urgency and what's going on in the market in terms of demand. I would also add this. A lot of sellers have a range of how the house looks when it's on the market, right? Some houses are completely vacant, nothing going on in them. Some houses are vacant and staged, and some houses are lived in. And depending on how that house shows can also put you into one of these buckets as the recommendation. So if the house is going to be lived in and it's not going to be as clean as if it was vacant or staged, then, and you're listing sort of at the beginning of the year, you're probably going to be looking at this first box and this high urgency, low demand, right? And the other thing too is how quickly do you want to sell, right? If your goal is to try to make sure you put this on the market in a way that it sells relatively quickly, then this is where I would go. And honestly, I would do the 1.9 over the 2 because 1.9 will fall into some search buckets that will allow people to feel like it's a great deal, even though it's similar to 2 million, right? That's why we buy $1.99 things instead of $2 things. This puts you at about $333 to $350 a foot. And again, it's adjusted down based on the seasonality. It's adjusted down because we can't capture all of the value of what the comps are saying. If you are medium urgency, medium demand, say rates come down a little bit, say the market picks up, say you list it a little bit closer to spring, or if this was sort of an end of the summer kind of a thing, then you're looking at more 2.1 to 2.3. And then lastly, if you are just saying, I'd like to put this on the market, I'm willing to let it sit there for a year and see what happens, or the market really picks up because we see a drop in rates or something happens and everything is starting to pick up and get better. If you've got this thing totally cleaned out and staged and it looks absolutely perfect, then that's where we look at, okay, maybe we push it and we try to go to 2.4 to 2.9. And I think you could rationalize and justify any one of these prices. I don't think that you can necessarily push the high end too much, but we know this is a unique house and there could be that unicorn buyer. So either way, I think that any of these ranges, depending on the situation, put you in a good spot as long as you're matching the price with the situation. And the biggest thing is we'll just have to revisit this as we get closer to when you actually list. So if you have any questions about any of this, get with Caroline. She can help you with those. And I wish you guys the best of luck. I look forward to coming back and reviewing this again with you right before we list. Take care.